The expense to rent a house is pretty straightforward. You pay your monthly rent and some utilities, and that's it. A lot of people think it's the same when you own a house, but instead of paying rent, you're paying a monthly mortgage with an added benefit that you're also building equity. If the real estate prices appreciate, which they generally do, you come out the other end with good returns on your investment. However, just like owning a car, owning a house also comes with extra expenses than renting one. If you're not careful, they could burn a huge hole in your pocket. Hey everyone, it's Gourav Khatri and I help people buy, sell and invest in real estate all over the GTA. And today's video is about expenses you need to budget for as a homeowner. If you're a first-time buyer and thinking of purchasing a house, then this video will help you decide if you're ready to take on the next chapter of your life to becoming a homeowner. So let's get to it. Mortgage payments. Unless you're buying your house in full cash payment, you will need a mortgage to fund such a big purchase. The way the current interest rates are, I usually like to assume around $600 per $100,000 worth of mortgage you're going to require. For example, if you're buying a $1 million home with a $200,000 down payment, then you're going to need an $800,000 mortgage. So $600 times 8 is $4,800, which is approximately what your monthly payments could look like. The mortgage payments usually consist of two components, principal and interest. The principal is used to pay off the mortgage, and the interest is charged on the amount you owe. In the beginning of your loan term, a major chunk of your monthly payments will comprise of interest because your mortgage is high. But as you slowly pay off your principal, the mortgage amount will reduce along with the interest payments. Towards the end of your loan term, a major chunk of your monthly payments would then be principal payments. Regardless of what portion is higher, your monthly payment doesn't change unless you do a refinance or your interest rate changes. Property taxes. Local services like firefighting, public education, libraries, local police, etc. are all funded by money that comes from the collected property tax. Every property owner is required to pay this tax. It is calculated based on the municipal tax rate, educational tax rate, and the property value. The municipal tax rate is set by the municipality depending on the type of property. The educational tax rate is set by the provincial government to fund the elementary and secondary schools in Ontario. And lastly, these rates are then applied to the current assessed value of the property. Now, the current assessed value is different from the fair market value of the property. A fair market value is basically the amount both the seller and the buyer agree the property is worth. And the current assessed value is the amount the city thinks the property is worth based on the surrounding areas and other specifics of the property. Usually, the current assessed value is much lower than the fair market value, and properties are typically reassessed every 4 years. Unless you're buying a mega mansion, I would assume around $300 to $500 a month in property tax payments. Insurance. If you get a mortgage to purchase a home, your lender will most likely require you to have insurance on the property. They do this to protect themselves. In case there's a fire or any other calamity, they need to be able to recover their money, which can only be done if the house is insured. Regardless of whether you have a mortgage or not, it is still advisable to insure your house. Imagine if your house burned down. You still have the land, but you've lost a major chunk of your equity. If it doesn't burn, insurance can help you take care of the repair costs. Property insurance doesn't cost much, on an average around $150 to $250 a month, depending on the type of house, whether or not you've had previous claims, and the kind of area you're situated in. If it's a condo apartment or a condo townhouse, then your insurance payment would most likely be around $500 a year, because you would not need to insure the building, just the contents. The building would have already been insured by a condo corporation. In case your property insurance quote comes way too high, then make sure to check your credit score because that could impact the insurance quotes you get. Utilities. When you're living in any kind of property, you're also using electricity, water, and gas. These services cost extra and are billed as per your usage. Commonly in the GTA, air conditioning, washing machines, dryers, stoves, lights, etc. are all powered by electricity. Gas is mainly used to power the furnace to heat homes. Gas is cheaper than electricity, and that's why some people prefer to use gas appliances such as stoves and dryers. For a family of 3, you can assume around $100 to $150 a month for electricity and $100 to $200 a month for gas. These numbers change throughout the year because during the winter months, you're using the furnace, that is more gas, to heat your homes, and during the summer, you're using the air conditioner, that is more electricity, to cool your home. Your water bill will consist of 2 charges, one for the actual consumption of water and the second would be sewage charges, which is basically the discharge of water waste from sinks, showers, toilets, etc. On an average, you can assume another $100 to $150 a month for your water bill. Additionally, I would add another $100 a month for internet services. However, there are always deals going on for high-speed internet services. By the way guys, please make sure to give me a quick thumbs up and hit that subscribe button to keep getting regular updates on my latest content. Condo fees. This doesn't apply to all properties but mainly to condo townhouses and condo apartments. You need to pay this fee because you're part of a condo corporation that looks after the day-to-day of the building. They take care of snow removal, road maintenance, insurance, etc. Many condo corporations also cover all or partial utility services as part of the monthly fee, which basically means they will pay for all or part of your utilities regardless of how much you use. Condo townhouses do not require much maintenance because they're all separate homes next to each other. But condo apartments have elevators, concierge, security, etc. and the cost for these services can add up pretty fast. That's why condo townhouses have maintenance fees ranging from $200 to $500 a month and does not increase too often either. I remember selling this condo townhouse a couple of years ago. In the last 15 years, my sellers only had a total of $100 increase in their monthly payments. Condo apartments on the other hand have monthly fees ranging from $400 to $1,000 a month and more in some cases, and these fees can go up pretty fast. Maintenance and repairs. Your property is going to go through regular wear and tear as you use it. If you do not do regular maintenance and repairs, you may have to spend quite a bit of money later on. The older the property is, the more it's going to cost to maintain and make repairs. Commonly, you'll have to get servicing done for furnace and air conditioner. In a bad storm, some of the roof shingles may fly off, requiring replacement. During the rainy season, your basement may get flooded, or you may start seeing a growth of mold. No matter how careful you are, something or the other may come up. So always make sure to budget for maintenance and repairs. In some cases, you may have to shell out a huge chunk of money for replacement. For example, the lifespan of a furnace is 15 to 20 years, and no matter how regularly you service it, there will come a point when it needs to be replaced, which will cost you around $7,000 to $10,000. I like to budget for around 0.5% of whatever the value of the home is. For a $1 million home, you're looking at around $5,000 a year. If you don't end up spending that amount in any year, save up because you may have to spend more later on. Rentals. Instead of having to purchase, many providers nowadays provide rental options on some essential services and appliances. The benefit to you as a homeowner is that you don't need to fork up thousands of dollars right away. Instead, you pay a small amount every month to use the appliance, and that same amount also covers servicing and repair costs. Some common household appliances I've seen people rent are furnaces, air conditioners, and hot water heaters. On an average, hot water heaters rent for around $30 to $50 a month, furnaces around $50 to $90 a month, and air conditioners around $30 to $50 a month. For the most part, I've seen people tend to own the furnace and the air conditioners, but rent the hot water heater because they tend to require servicing and repairs more often. Let me know in the comments what other expenses you have as a homeowner.